Avoid early exchange offers that require upfront fees or promise exclusive VIP access. These are often scams designed to prey on hope and impatience. No legitimate financial institution will demand money before completing an exchange. The smartest approach is to monitor developments through trusted financial news sources, official government channels, and verified expert analysis. Keep an eye on related indicators: Iraq's oil exports, Vietnam's trade data, infrastructure investments, and statements from international organizations like the IMF and World Bank. It's also vital to understand that currency revaluations do not happen overnight. They are typically phased and coordinated to maintain market stability. Patience and strategic planning, rather than panic or speculation, will protect your financial interests. Beyond individual investment considerations, the potential revaluation carries broader implications for the economies of Iraq and Vietnam, regional stability, and global financial markets. A stronger Iraqi dinar would signify confidence in Iraq's recovery and reforms, attracting more foreign capital and improving geopolitical standing. Similarly, a revalued Vietnamese Dong would reflect the country's growing economic influence and deeper integration into global supply chains. However, risks remain. Geopolitical tensions, global economic uncertainties, and internal political challenges can disrupt even the best-laid plans. Investors must weigh these factors and diversify their portfolios to hedge against volatility. Finally, it's worth addressing the psychological dimension. Many long-term holders of these currencies have experienced false hopes and disappointment. This history has bred caution and skepticism. While the current leak is promising, it's essential to maintain balanced expectations and rely on facts over hype. In closing this first segment, remember that knowledge is your greatest asset. Stay informed, stay vigilant, and approach every update with a critical mind. We'll continue to track this story closely and provide clear, factual insights to help you navigate these uncertain but potential. Vietnam's Dong, on the other hand, has long been undervalued despite the country's impressive economic growth. Vietnam has transformed itself into a manufacturing powerhouse, attracting billions in foreign direct investment, expanding export markets, and consistently exceeding growth expectations. The Vietnamese government has pursued reforms to modernize its banking sector, improve infrastructure, and strengthen trade partnerships globally. Despite this, the Dong's official exchange rate remains artificially low, in part due to government policies designed to maintain export competitiveness. Many analysts believe the currency is poised for revaluation, reflecting true economic fundamentals rather than political expediency. Understanding the difference between redenomination and revaluation is critical here. Redenomination is a structural adjustment, essentially a change in the currency's format, like removing zeros to simplify transactions without altering the currency's purchasing power. Revaluation, however, is a real increase in currency value relative to others, meaning your holdings could be worth significantly more in foreign exchange terms. The rumored rates between 4.5 and 5.5 per unit imply a revaluation scenario, which would be life-changing for investors holding these currencies long-term. For example, a $100,000 investment in Iraqi dinar at old valuations could theoretically surge to several $1,000,000 if these rates materialize. However, despite the potential upside, skepticism remains justified. The financial world has seen numerous rumors and leaks about currency revaluations that never come to fruition. What makes this current leak intriguing is the credibility of the source. Redemption centers, which are not casual or speculative institutions, but controlled entities that deal with large-scale currency exchanges. This leak is reportedly circulating through private finance groups, investor briefings, and insider channels with multiple points of cross-verification, adding to its credibility. Still, until official announcements come from central banks or governments, the information must be treated as unconfirmed. Given this environment, what should current holders or potential investors do? The first and most important step is to stay calm, avoid impulsive decisions, and prioritize education and preparation. Verify your holdings carefully. Authentic currency notes, official purchase records, and transaction histories must be Welcome back to the Iraqi Dinar, your trusted source for in-depth analysis on global currency developments that can influence your financial future. Today, we dive deep into a development that is causing waves across investor communities. A rumored revaluation leak involving the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. This isn't just another speculative rumor. It's potentially one of the most significant currency stories in years, carrying implications that could reshape the financial lives of millions. Imagine waking up one day to find that your IQD or VND holdings are suddenly valued between 4.5 and 5.5 units per US dollar, a massive leap from current rates, which typically hover far below 1 cent. At first glance, this may sound like a fantasy or the rehash of previous false hopes, but the source of this leak is what sets it apart. The information appears to originate from redemption centers, specialized financial institutions responsible for high-value currency conversions, often operating discreetly and with ties to government or major international financial networks. This isn't mere internet speculation, but a whisper from trusted corners of the financial world, suggesting a soft rollout of a long-awaited revaluation. If these reports are accurate, and transactions at these new rates are already occurring, we could be witnessing the early stages of a coordinated financial reset, carefully managed to avoid sudden shocks or panic. But before excitement takes hold, it's essential to understand the full picture. The story behind the Iraqi Dinar and Vietnamese Dong involves decades of geopolitical turmoil, economic challenges, and slow but steady reforms aimed at stabilizing and modernizing their economies. Let's start by exploring the background of these currencies, the historical challenges they've faced, and the reasons why investors have held onto them despite long periods of stagnation. The Iraqi Dinar has a storied past. Prior to the conflicts and sanctions that ravaged Iraq's economy in the early 2000s, the dinar was a relatively strong currency, trading at several dollars per unit. However, years of war, sanctions, political instability, and inflation led to a dramatic devaluation, pushing the dinar to near-worthless levels. Since then, Iraq has been on a path of recovery, rebuilding infrastructure, increasing oil exports, which form the backbone of its economy, and implementing reforms to improve transparency and financial management. More recently, the Central Bank of Iraq has signaled intentions toward currency reform, including redenomination efforts designed to remove excess zeros from the currency. This move is intended not only to simplify transactions but also to build public confidence and pave the way for a more stable exchange rate environment. Digitization efforts are underway, aiming to bring Iraq's financial systems in line with global standards, reduce black market activity, and attract